Okay, so I have an investment thesis that we've talked about a good amount in this room, and Nicholas, Kumar, Brian, Naval, everyone, Jess, everyone. But basically, it's about oil. It's about oil and natural gas and all things in the petroleum complex. And I'm going to try and break it up. This is the first thing. I think it's a good time to be bullish oil. In the next few chats, I'll explain why. So let's start with, remember sort of that energy makes great money, but commodities as money are problematic. And here's what I would point out, that the current price of futures that are trading right now, they're very much the result of mandatory investment actions by large institutions, including companies, public and private, that are positioning themselves in the economy. So what's interesting about investing in oil is that its short-term price is magnetically drawn to supply and demand conditions. Now, there's no major imbalance in the economy here per se, because everyone's got someone on the other side of the trade. And basically, the net aggregate of market makers are making this all into directionally largely neutral, with bag holders that are private entities, not tradable markets. And I bring this up because now look at the last 10 years. So we are towards the bottom half of the trading range in the low 70s, which for anyone who used to follow this stuff is, pretty right-sized for most of the 2010s. Now, what this does, so now all these prices are getting set by near-term market action because it's setting to supply and demand, plus the forward positioning of companies and whatnot. But what's interesting about it is that even though the money supply has declined for 12 quarters straight in the U.S., it's still up substantially from 2019, let's say. And across the world, it's up substantially. And so I think right now you have weird effects pinning oil to the lower side of what it would be priced at if all this money was actually chasing what it needed in future energy resources. So that's one leg of it, but things can stay the same for a long time. Like something can be a great value, but it won't turn around in price until other people start to value it more highly. However, I think in this so you've got this low price of oil in an environment where tons of money has been created. And now I personally think that Putin's last gasp to sort of get this stuff done could easily be messing with the price of oil. And frankly, the Middle East may join in helping him do that. And the reason that would be brilliant for him to do is, one, because he drives up the price of something that's just sitting in his ground. But if he drives up the price of oil, inflation is going to go up again. And then the Fed is going to have to turn around and deal with that. And so it could be an interesting way where a smart person would consider positioning the U.S. into forcing to raise rates to control inflation, because Powell took the bait the last time. He tried to fight the inflation from supply chain issues in the energy complex. So part one is just tending to the lower end of price range over 10 years, even though there's been a lot of inflation since then, right? Part two is the oddly low price of oil right now versus how much money has been created directly since 2020, let's say, across the world. Part three are the two legs of geopolitics, odd price controls right now, keeping prices lower, and the possibility for a big spike as everyone turns to try and deal with that new situation. And then part four is that even if you believe 100% in the green economy, if you want to build that world, it's 30 years of peak oil production from here on out as we do that, because it's going to take energy to get there. So usual disclaimers and all that stuff. And I'm not making I'm not saying anyone should YOLO this, obviously, or put on leverage, or that it's my strongest idea or my biggest position, but it's definitely changing the way I think about the way I allocate, at least for the next 2 or 3 years, just in the sense of I don't want to get beat there. If I wake up in 2 years and oil has come up to 125, which could easily happen. Come on, that was happening in the late 90s, for crying out loud. So I think there could actually be a big opportunity there. But again, as part of portfolio management, not a big bet, but a reasonable kind of okay, let's tune down this, tune down that, and a little bit more of a chunk towards commodities, especially oil. Oh, and always, portfolio management doesn't matter if you were to rebalance. If I put this on today and oil went to 125 tomorrow, I would immediately rebalance. That is the idea of it. It's not that I think it's going to stay at 125. It's that I think in this near term 2 to 5 year or even 2 to 3 year tail, I think it's a reasonable place to be risk adjusted positioned. But if it hit, I would absolutely sell. Not the whole thing, but I would trim. It's just, remember, the portfolio does not matter if you don't rebalance. It doesn't matter. It doesn't matter if you don't rebalance. There's no benefit to it if you don't rebalance. Besides like the dumb eggs in one basket, if you want portfolio diversification to actually make you more money over time, you have to rebalance.
I think it's an interesting hypothesis. I don't like betting on commodities or macro stuff because you don't really have an underlying earning asset that you can hold for decades that you can value properly. But all of that said, I do like that it's a counter-cyclical bet, and it's also a counter, almost religious bet with now all the ESG narratives and mandates where lots of companies are supposed to not buy oil and bet everything on green, renewable, et cetera, people mix up their politics with science and technology, and so they're eventually going to be disappointed. Or in the meantime, China will buy lots of cheap oil. So I actually think this is a reasonably good bet. Of course, do your own research. I'm not going to buy any.
Yeah, I also don't like betting on commodities, and generally speaking, I'm okay being somewhat U.S. centric and like broadly diversifying, other than some basically big handlebar bets, like a ton of crypto on one side of the barbell, and then essentially Apple and Berkshire on the other side, and then in the middle, just kind of all indices. And I suppose, like, a range of bets that I think will probably also approximate the indices as well. So I don't do this often, but yeah, just $70 a barrel. I remember that number from like 1997. It's crazy. So that's what made me think of it. Like, how is oil this cheap legitimately? Now, maybe the instruments don't actually execute it properly, and that's something to think of, or that's something for me to think of. Yeah. So, but thank you.